Welcome to Trading Lounge and the US indices for Wednesday, September the 7th, starting with the SP 500 here. As you know, we've got two pathways. One is that from the top of the market for the S&P, we've got the wave A here, then an A and a B and a C wave here for wave B, and then coming down for wave C here. The other pathway is that this A, B, C here is already placed in this particular structure, and we simply go straight down from here, but a market rarely goes in a straight line. There's two ways to view this particular move coming down through here, and I just want to explain that. So we could look at this current move to this point here. We can look at it in a 5-wave Elliott structure. So this is one way to view it, and that makes life nice and simple in that way. And then we would have an ABC back again, coming back 50 or 60%, and then coming down. Now that's how I've drawn out this particular move here. If we had these 5 waves here, these 5 waves coming down to here, we would have an ABC coming back to around the 4,000 and then dropping again. So all we need to do is to look to go short under this A, B and C here. We can go short under here under the B wave for a safe trade. The other way to count this particular move down through here is that with Elliott it can get a little bit more complicated, where you have wave 1 and 2 come into play here, and then you can also have wave 1 and 2 come into play, and then you can also have wave 1 and 2 come into play, and then say a third wave come in, and a fourth wave and a fifth wave here to make this 1, 2, 3, 4, 5 here. So really all of this is just that particular structure, and then you have 4 and 5. Now I've done that just quite simple with 3 wave 1 here as the third of the third of the third. So you could count this down here like this. You could count this down here like this. You can count this down here as an A and a B and a C wave coming down here, and we've got one more sort of leg to come down here. We'll be looking at that today. Now, as I've mentioned last a few times we've spoken, is that this move that comes straight down through here, or this move that comes straight down from here, will give them equal weighting, and we will just be patient and we will move on the evidence all the time. So once this move down from B down to C here completes in 5 waves, then we'll have a low in place like this. So then we can just go short again under this particular low here, or we can go under the B wave. So we're not going to miss anything. We just need to be mindful that two things can occur at this point. The 4,000 is a big number. We can see that the market has gripped it here. The NASDAQ is at the 12,000, another large number. So they might not let these numbers go that easy. Okay, so let's go in and have a look at the bearish count first. So on the bearish count, we'll just go to 50k tick, and this is from the top of the market down here. We can view this down here as the A wave, and A, B and C for the B wave, and then we can view this down here as wave 1. So we still want a little structure to come down to finish that onto the 3-8, and then we can have an ABC structure coming into play and then down. So our goal when we look at this little area here will be to, in very simple terms, to go short under here, but we'll be able to get a better position than that. But in a nutshell, coming back above the level here as an A and a B and a C would be this particular pattern here. So we come down, we're coming down now, and we'll have an ABC back up, and then we'll come down, but we'll be able to get another classic trading levels pattern sitting in that space there. We may get something just hitting the 4,000 like this and being so simple and come down. We'll catch it anyway on either of these lows here. So we're not going to miss anything. We just need to be aware of it and do the right thing at the right time. Now, of course, this is a trend that's come down through here. So, you know, trends correct themselves along the way to a certain degree, but in the bigger picture, a large trend here also needs to rebalance as well. So all of this group needs to rebalance. So this has been correcting itself on the way down here, but at the same time, this whole leg here needs to correct itself. It needs to rebalance. So we'll get that. The other, just to pull this apart a little bit further here, I think we're on the 10k and the 1k on this bearish count. So let's just go in and investigate this a little bit more here. So in this case, well, we could look at it this way. Let me just have a look at the 1k tick. I think that's probably a better scenario here for this. Let me just bring this more data into this area here. Yeah, this is much better. So this is what I'm thinking. So I've always got different counts going, because I tried to think, you know, if I'm going to go long in a market, then I really want to study the short side of the market. I really want to make sure that you know, the evidence weighs up on that particular side. So I've always got lots of charts going on. So this one here would be looking at 1 and 2 here, then 1 and 2, and 1, 2, 3, 4, 5 for the third wave, fourth wave, fifth wave for the third and the fourth here, and then 1, 2, 3, 4, 5 as we've been communicating about, and then the 1 and the 2 to the downside at that point. So yeah, that's how that can play out. Currently at the moment, we're also looking at this here as a wave 4 here and coming down to the A wave here. So if I just go back to the daily chart for one moment. Yeah. So currently in this move here, I'm looking at this as an ABC coming down here, and this is also a fourth wave in here and coming down for a fifth wave. So let's just cut to the chase, and we're going to go to 100 ticks, which is drilling right into that space, and we'll just bring in some more data. Is 2 enough? Not quite. Let's bring in 5. Okay, that'll do. So anyway, last time we spoke, we were looking at wave 4 here. And then also when we spoke last time, we had wave 1 in play, and we were looking for a move, an ABC back for wave 2. It has moved up into the box here. Yeah, this is probably the best way to view this. Not the best looking 5-wave structure up here for that, and it could be counted differently, but that's okay. We talked about being short up here and short here. You can put a stop here. Once again, we can also look to put a another short position under here, and we could also put another short position under here as well. The 3.9 here, just want to point out that the NASDAQ is sitting on the 12,000, and this is sitting quite firmly on the 3,900. Not a big number, but you know, it's the closest largest number, and that's where the support is, and that's showing up at 12,000 on the NASI. So it's quite possible that you know, it's like a ball bouncing, isn't it? You know, that comes down, bounces, sinks a bit lower in this case, and bounces back, and so we're still in that bouncing mode. But all we need to do is short new lows, like we've done in this situation over here. So we could do the same over here. So there may be you know, there may be another move up here first before there's a move down. But the count we're looking for, the Elliott wave count, is from wave 1 and 2 here. And then we're moving down to wave 3 over here, and then 4 and then 5 to finish off this C of B here at the 3.8 here, or around the 3.8. Okay, so in the next situation, we've got wave 2 to wave 3 here. So we're looking for 5 waves between those two points. So we've got wave 1 and 2 here, and then we'll have 3, 4, and 5 to finish that off. And between this wave 2 and this wave 3, we're looking for 1, 2, 3, 4, 5, another impulse wave. So sets of impulse waves. So all you really need to do here at the moment, to be on the safe side, is to short new lows. Okay, that's as simple as that. The other thing that we need to mention too, is the bullish weekly cycle, so which is on our website, and that would see Wednesday and Thursday with sort of swings in the market. They're the days that normally take your stops out. So just be a bit careful about that. But anyway, that's where we are, and that's the S&P. So we'll just stay on track with that. And the NASDAQ as well is sitting on the 12,000 here, as I mentioned. So it's got good support here. You know, it's come down and already bounced off here. And then it's come down and it's sort of, you know, put a little hole in the brown paper bag, so to speak, and so it's becoming weaker and weaker. But it can still bounce here a lot and you know, and do a bit of damage. So just be careful about that. We want to see the 12,000 at the moment. You know, when you go short in a market, you ask yourself, what is the closest largest number? In this case, is the 12,000, and then you ask yourself, does the market have that 12,000 as the resistance at this point? And you'd say no. So you'd need it to, you know, we always look for the first low below the level to look to short, and then it's made a whole new leg there, so that we can go over to this one here, and then we could look for another little one in here as well. But like I said, this market, it won't give up that 12,000 that easy. We could see another move up here before we see a move down, and if that is the case, there's going to be another retest here, so you could also use that there as well, because it's like using this one. Why use this one when that one is there? There'll be another one over here to use, you know what I mean? So you keep moving across, and if you're patient, the market will come to you, rather than if you start chasing the market, like trying to short it up here. Yes, you can get a better price, but what happens if there's a bigger ABC correction that comes into play for some reason, like an A wave, a B wave, 1, 2, 3, 4, 5 up here, and then comes down? So you'll do yourself some damage if you chase the market. So just let it come to you, and yeah, it should be cool at that point. The pressure is to the downside. As you can see, the whole trend is to the downside, and yeah, you've seen the stock market, so we're still looking for stocks there. There's just some support here. So we should go from 12,000 down to 11,500. That's our trade. But the market's got to prove to us that it's weak, and it needs to do that by taking out new lows. So let's just be a bit patient for that to occur. And if it doesn't occur, well, then we're not being trapped here. Simple as that. And over to the Russell. Now, we've had short trades in the Russell. You may not have gotten through all of these, you know, but just moving the stop down. We talked about shorting it again after this ABC correction coming into play here for this. So let's just have a look at that. So from wave 4 here, we're going all the way down to wave 5 here. That needs to go on top of that one, of course. And between 4 and 5 here, we're looking for an impulse wave of 1 and 2 and 3 and 4 and 5. Don't worry about these target areas. Never bother about these target areas in here, because I haven't done any ratio analysis on them or anything like that. I just count the structures, but we'll be down here somewhere, and you know the trading levels, you know what's going on. So the minor trading level here, 8, this is like it's come down here. It hasn't, this is the first time that it's come through and retested. And if it's going to, you know, it's the whole game is about support and resistance at certain price points, and number 8 is the third strongest number, and it's retested it here. So if it took out this low here, that means it's rejected this number. You know, the other point that I always make as well is that if we look at group 1 here of 18, so when we talk about 18 as the closest largest number, this is group 1 above and group 2 below here. You do anything within this space here and you're at risk. So I always say that less is more. And once the 65 here, the 1765 becomes the retested resistance, then the market has not only rejected 18, it's rejected this level. So it will be going down to 17 at that point. So that's its swing range in here. And you can see that even though it goes above the level, it never found it as a tested support with a classic trading levels pattern at that. It's tested as support. So this is the first time here. We know that this is We know that this is corrective. We know it's a continuation pattern. We know the trend is down, and we can see now that the market's showing us that it's retested this here. Now, it doesn't mean that it's going to take that low out, but if it does take that low out, then it has rejected that, because in the meantime, we could get another move back up here and then down. You know, we don't know that just yet. We do have a little 5-wave structure here that looks corrective. Still, let me just have a little look inside here. Yeah, that satisfies as a this is not the best impulse wave here, but it'll be the end of the session and so on, so it's a bit rough and ready, but it could be an A wave, a B wave, and a C wave up here for that. I mean, I would like to put wave 1 and 2 in here for that, but I have to say that's a little bit loose. But we do have that 5-wave structure here a bit, but I'd be a bit careful. This is not, you know, this is still support here, so you really want, before you short this, you could short it under here, but if you look for a classic trading levels pattern at 1780 here, then, so this 1780 needs to become the retested resistance, because it's not there yet for that. So that's what you would look for. So there can be a bit of a rally on that, so just be a little bit mindful of that. We're not there yet with that, and Wednesday and Thursday bring those swing days, so be careful about being trapped there. Taking that low out here in the bigger picture tells us that this is being rejected now, and we're heading lower. So that's that. And the Dow Jones, so with the DJ here, we can bring, you might be still short here, we can bring this stop down to this point here now. As we have an impulse wave here, and we're looking for wave 2 here, we've got that. We've possibly got wave 1 and 2 in here, and still edging lower here. Now, we're at 30,000 here, which is a major trading level 3. Then we've got 1, 2, and 3 here, which is all of group 1. Once I normally find that number 2 becomes the retested resistance in a downtrend into group 1, once that becomes the retested resistance, and it is the resistance because it's taken out that low here. Right, once that occurs at number 2, then the market is normally pulled down to this number here, the closest largest number. You know, they're like magnets. They're all like strength of magnet. This magnet is bigger than this one and this one. Do you know, that kind of thing? And once this one here becomes fails, then this one here takes over and pulls it down. A bit like that anyway. The psychology of it, I guess. The volume. I mean, the psychology is, well, the volume, I guess. Well, the volume's the action of that, the evidence of that. But that's where we are. So all good. I'll leave it all at that. Thanks for tuning in. Cheers.